All right, gang, we did some work here for the live trading room, and what I'm gonna do is I'm gonna record this. All right, so we're gonna look at exactly what we were talking about this morning and how everything played out. So what we have here is a 1 minute chart of the S&P E-mini futures, and today the market had opened and had a strong move to the upside, and then gave us a corrective wave down. What we were looking at for the live trading room. All right, we had this swing low here, this whole area. So we'll take our Fibonacci and I'll show you what we were looking at. All right, so we have this whole impulse to the upside, and from that point, we started watching for more of a Gartley type of pattern to occur. And as you see, we had that first retracement down of around 50%, and then we had a rally, and then another retracement down. So I put in Gartley, modified Gartley, bat type of pattern, where this is where we were talking about getting long the market, even into this push down, that we were looking for a push above today's high. Once that happened, what we started to look at was an Elliott wave type of formation. So you had your first drive to the upside. So what we did was we have a higher low, and this became a 0. This became 1. This became a 2. This became the third wave. This became the fourth, and this became the fifth wave to the upside so far. So market essentially put its bottoming pattern in the shape of a Gartley, and a lot of times you do get that. You get that higher low, and it forms that Gartley-ish type of pattern or a bat pattern. And once that higher low's in, then you start the process of your Elliott wave. Now, we know from Elliott wave that 0 to 1, 1 to 2, 2 to 3. 2 to 3 is typically your long leg. And the one thing you don't want to see it do is come back below the first wave, and you want to see it hold roughly at 38 to 50% of the swing. So you can see how it held perfectly there, that 38 to 50%. And this is essentially what we talked about earlier this morning, the potential for a nice rally back to the upside. So, oops, let me just fix this. All right, we'll get rid of that. And let me just draw in your pattern. Okay, so you had your X, A, B, C, D. Now, we're not doing anything with the signal service until after the new year because the market's been kind of wacky, and we're into the holiday season, and also we're doing some recoding for our signal software, and we're looking to have the Russell index, which is exciting. And this is a really trendy type of index. That's going to be coming on board with us after the new year. So really looking forward to that. That's a great index to trade. And you see we're getting that fifth wave up. Okay, we're getting those little retracements, getting that fifth wave up. What we can expect after this market starts going up is potential for a pullback. All right, and then you have yourself another ABC retracement or XABCD type of thing this afternoon. But keep in mind today is FOMC, so it's a wild card after the lunchtime hour. And as you see, we are hitting 12 o'clock Eastern time in New York. So getting that last push, that last drive up into the lunchtime hour. I know you probably can't see this on the video, but it's around 12 o'clock Eastern. Let me see if I can show you. There you go. See it? So normally on a trendy type of action that happens, you'll get that drive. And that's about it. Let's have ourselves a great rest of the day, and see you in the chat room after lunch.